It is really great to be here in person at this outstanding conference and to be reminded of what an amazing industry we are all really fortunate to be a part of. The energy, the personalities, and the opportunities are really infectious. And it's an eclectic industry. It's somewhat unusual. It's special and it's unique, and we've tried to capture a little bit of that irreverence in our slide deck today. I hope you enjoy them. We've certainly enjoyed putting them together, and thanks to Rocky and his team for doing all the heavy lifting to get there. Since we emerged from the fog of COVID in 2022 and the associated travel restrictions, I've stood at this podium for the last 2 years telling you that the price of gold would be higher the next time we meet. And fortunately for me, I've been correct. This year, I come with the same good news. I'm going for a hat trick. The gold price will again be higher in 2025. In an excellent recent research piece, Citi forecast a base case gold for 2025 to be between $2,700 and $3,000 an ounce. That's up between $200 and $500 an ounce from current prices. And I think they're right, maybe a little conservative. And before you ask me, I think the copper price will be higher too, and that's a commodity that now represents over 30% of our revenue, so one which we're keenly interested in. But the copper story really takes much less convincing because it is so compelling as the world transitions to renewable energy and electric vehicles. So with the gold and copper prices already high, I mean, the gold price is over 3,700 Australian dollars an ounce, which is an incredible price. When I started in the industry, it was less than 500 Australian dollars an ounce. And it's likely to go higher. Investors should really be high-fiving and cheering from the rafters. But the reality, as this chart shows, that gold stocks have underperformed the gold price and are well off their highs of 2020. There is no doubt that some of this has been caused by company missteps, and I will cover off on this for evolution in a few minutes. But a large contributory factor sits at a macro level. I am really concerned that today's investors and analysts continue to use paradigms and valuation models which, in my view, are applicable to a world that no longer exists and is no longer relevant to today's world. I do believe that there are 3 long-term structural shifts that have fundamentally changed our world and thus warrant a change in our approach. So let me try and explain. Firstly, 30 years ago, and that's a reference point to when I first started working in the mining industry, the combined market capitalization of the 5 largest companies in the world was $270 billion US, and not one of them was a technology company. Today, the 5 largest companies are all technology companies, and their market capitalization is over $10 trillion. Apple, the world's largest company in the world, has a market capitalization of over $3 trillion, a single company. So that means the entire mining industry, BHP, Rio, Glencore, Vale, and every other listed mining company, even including the mighty Evolution, in terms of value is about 1/3 the size of Apple, a single company. So while our industry has grown, our relative importance has reduced. A fund manager in New York or London today is much more interested in the next emerging technology than in resources. And that said, as everyone here knows, the irony is that the technology sector is completely dependent on the metals we mine for their products. Secondly, we must accept that the world is fundamentally different to what it was 30 years ago. Globalization is being replaced by nationalism and tribalism. The United States leaders of the free world are in a mess, and in less than 100 days, a new president will be elected. This is at a critical juncture, as you heard Kim Beazley talk about yesterday, in world geopolitics, and we shouldn't underestimate the gravity of this situation. The world has effectively decoupled, and aligned democracies are confronting an increasingly aligned China, Russia, Iran, and North Korean bloc. Thirdly, there is an ongoing war for talent. For a mine to be great, it needs more than a great ore body. It needs great people, and this is potentially our industry's greatest challenge. According to those lining up to get into the tech sector, mining just isn't cool, and university enrollments in faculties that are critical and vital to the future of our industry are not where they need to be. So what's the best way forward for us as an industry to adapt to this new world? Firstly, I think we need to recognize that investment portfolios are now all skewed to technology. We, the mining industry, therefore need to seek out and find subject matter experts. And the great thing is that a lot of the best are right here in Australia. The other great thing about our superannuation industry is that it creates long-term, knowledgeable and patient shareholders, which our sector desperately needs. And this provides Australia with a clear, sustainable, competitive advantage in the ability of our industry to access capital. I'm really pleased that 3 major Australian funds own 25% of Evolution. These are groups who have spent considerable time and effort engaging and understanding our business. Secondly, ignoring for a minute the political ramifications of these big geopolitical changes, there are enormous long-term flow-on effects for the mining industry. Competition for scarce resource assets is increasing and will continue to increase. Military spending is rising, and security of supply is becoming increasingly important. This will fuel copper demand, making it more expensive and more valuable. Against this backdrop, central bank and investors will also continue to de-dollarize their portfolios and increase their exposure to gold. Investors should also increasingly recognize this and focus on jurisdictional risk in making investment decisions. Companies with assets in safe Tier 1 jurisdictions like Australia and Canada, such as Evolution has, must surely command an increasingly higher value than the equivalent asset in an emerging market. And finally, we need to attract the best and brightest people into our industry, showing them career paths and opportunities that compete with the tech companies. Not only in terms of compensation, where I think we are already competitive, but also growth opportunities, engagement, and ultimately enjoyment. I'll return to these macro issues when I conclude my presentation because I believe they are so important, but will now shift my focus to Evolution. Strategically, as you can see from this infographic, we've established an outstanding portfolio of gold and copper assets. 10 years ago, Evolution had a market capitalization of around $650 million, which is less than 10% of our market cap today. Average mine life based on reserves was about 7 years, and we're producing 440,000 ounces of relatively high-cost gold. Today, we have 33 million ounces of gold and 4.1 million tons of copper in resources. We produce over 700,000 ounces of very low-cost gold, and our average mine life based only on reserves is at least 15 years. A critical differentiator for Evolution is our significant exposure to copper, where we have added 75,000 tons of annual production, and also our very long mine lives. With high-quality ore bodies, the lowest cost investment and highest rate of return is always going to be organic growth. We don't have to go out and buy new resources to grow production or to extend our mine lives. We already own them. And this has defined our strategy from day one. An absolutely relentless laser focus on working to improve the quality of our portfolio by lowering our cost per ounce, improving our margins, and extending our mine lives. And this has led us to the majors, who not surprisingly generally have assets that are in the best geological settings on the planet. However, having secured now a portfolio of long-life, high-quality assets, the reality is that our business has increased in complexity, and over the past couple of years, this has impacted our operational performance. We recognize we need to get better at operational consistency, reliability, and predictability, and we've made changes to address this. This has been in train since Laurie Conway was appointed to the new role of Chief Executive Officer, and Barry van der Merwe replaced him as Chief Financial Officer around 18 months ago. More recently, we appointed Matt O'Neill, a former senior executive at Glencore, as Chief Operating Officer, and Nancy Gui as Chief Technical Officer. Nancy has joined us from Agnico Eagle, bringing deep technical knowledge as well as very relevant experience in Canada, and Nancy's still trying to help me speak and teach me to speak Canadian properly. With a team now in place, I'm confident that we are well positioned to regain our reputation for operational predictability and reliability. I want to start the tour of our portfolio with the best sustainability story you will hear at this conference and probably in our industry. If you Google the lowest grade gold mine in the world, the first result will be, and I'm really not joking yet, do it yourself, Mount Rawdon. This mine, 85 kilometers west of Bundaberg, was built in 2001 for $35 million by a man who needs no introduction at this conference, Nick Giorgetta, who's in the audience today. Thank you, Nick. But $35 million is also not a typo. It really was. And this mine is scheduled to finally close as a gold mine in 2025. It started with an 8-year mine life in 2001 and will now close in 2025. Since pouring its first gold bar 24 years ago, it has produced over 2 million ounces of gold, and under our ownership since 2011 has generated $425 million of net mine cash flow. If you include what it earned for Equigold, Lihir, and Newcrest, it really has been a remarkable success story for the Australian gold sector. However, our shortest life gold mine may well be the asset in our portfolio with the longest life. In partnership with renewable energy experts, ICA Partners, we have spent over $20 million on completing a feasibility study to assess the conversion of this mine into a pumped hydro project which will have a life of over 80 years. The feasibility study and environmental impact study are now complete and unequivocally demonstrate that Mount Rawdon is the most advanced and cost-efficient pumped hydro project in Australia. The feasibility study also includes an independent study that shows the project will deliver lower power prices for Queenslanders. As we work to advance this project to construction, it will showcase mining's contribution to the economy and community in a unique and positive light. North Parkes is an asset that we have long coveted. In 2020, when CMOC sold a gold stream to Triple Flag, we were one of the underbidders. When CMOC decided last year to sell their 80% interest in the mine after a 7-month competitive process, we were again the underbidder. But this time, because of the certainty of funding that only we could offer, CMOC decided to proceed with us. The attractions for us in 2020 were evident and remain the same. A 30-year reserve life, an excellent team with deep technical knowledge of caving, great geological upside, and immediate cash generation. The first 7 months of ownership have exceeded our expectations in almost every way. We've generated $74 million of net mine cash flow, and there is a lot more to come. We identified in the due diligence and are now implementing a lower capital intensive sub-level cave option at the E48 ore body. And North Parkes has abundant resources, 70 years of mine life if we mine all of the resources. So therefore, our focus is on near-surface, high-grade mineralization that can leapfrog its way into the production profile. And here, even having only owned the asset for 7 months, we're having great early success. This is undoubtedly an asset that would fit well in any gold or copper company in the world, and we are very, very happy owners. Red Lake has been our most challenging acquisition. Canada is an excellent but different jurisdiction, and buying an undercapitalized mine when COVID was at the start of COVID with entrenched poor practices, complex geology, the reality is that it has proved much slower to turn around than we originally anticipated. However, as you can see, we are not waving the white flag. In fact, we continue to proudly wave both the Canadian and Australian flags and remain committed to Red Lake given its significant resource base, its long mine life, and the potential for making another high-grade discovery. The last quarter demonstrates that the changes we have made are starting to stick, with us recording the highest tonnes mined at the operation, and for the first time since we acquired it, we have a decent ore stockpile, as you can see in the photo in front of the mill. In FY25, we expect Red Lake to be cash positive and will then look to steadily build off this base. It's an understatement to say that Ernest Henry is simply a stellar asset. It consistently and reliably produces 50,000 tonnes of copper and 75,000 ounces of gold a year. In the 8 years we have owned it, it has generated $2 billion in net mine cash flow. We have extended the mine life out to at least 2040, and we continue to enjoy outstanding exploration success. In the last 12 months alone, it generated $482 million of operating cash flow and $334 million of net mine cash flow. But its future is even more exciting. Only this last quarter, we recorded the best gold intersection ever drilled at Ernest Henry, just under 52 meters, grading a little over 4 grams a tonne and 1.65% copper. We acquired Cal from Barrick in 2015, and it was scheduled to close this year in 2024. Since then, the operation has generated over $1 billion of net mine cash flow. We've discovered and built a new underground mine to complement the open pits and raise production to a sustainable production rate of 320,000 ounces a year. We've also extended this mine's life out to at least 2040. This last June quarter, Cal produced an all-time record of almost 95,000 ounces and generated $160 million just in that quarter of net mine cash flow. Like our other assets, we believe Cal's best days are ahead of it. Mungari has been a very important stepping stone asset for Evolution. Not only did we acquire a very prospective ground position and operation in the heart of the goldfields, Kalgoorlie, James, but Egyptian billionaire Naguib Sawiris owned it and became a strategic shareholder in Evolution. Shortly after the acquisition, Naguib led the equity raise we needed to acquire Cal. And do remember that the acquisition of Cal at 700 million Australian dollars was higher than our market capitalization at the time. Over time, we've evolved Mungari. We've consolidated a large ground position with the acquisition of Phoenix Ground. Then we bought Kundana and East Kundana from Northern Star, and we're currently doubling the mill capacity to 4.2 million tonnes per annum. And in keeping with our strategic objectives, we've also extended this mine's life out to at least 15 years. We're looking forward to showcasing these positive changes to the group of investors and analysts who will be visiting Mungari later this morning. The photos in this slide have tried to demonstrate the progress in our expansion, the expansion of the 4.2 million tonne per annum project from the site visit last year to this year, which last year it was effectively a cleared empty area, and this is what people will see today. I trust you can see how the macro issues I identified earlier have shaped our strategy over the last decade. They are also defining our future. So I wanted to share with you, as we conclude, some of the things which are front of mind for us as a board, as a management team, as an entire company, as we journey in taking Evolution from good to great. And no, this is not a photo of our board. Firstly, product mix is vital. In 2016, we had no exposure to copper, and it now accounts for around a third of our product mix. This was a premeditated strategic decision our board took. We like copper as a commodity and are optimistic about the price. But we also recognize that copper gold deposits are more suited to bulk mining, typically have long mine lives, and once in production, generate a lot of cash flow. Ernest Henry and North Parkes are great examples of this. Secondly, mine life is critical. To be a sustainable mining company, you need long life assets. In a market that is myopically focused on short-term outcomes, long-term value creation should still be prioritized. A good starting point is to look at the consensus gold price. I was really surprised to see that the consensus gold price is predicted to fall from its current level of around $3,700 an ounce to below $3,000 an ounce in 5 years, 2029. So putting aside whether you think this is a realistic view of where the gold price is heading after the case I made earlier, this skewed downward pricing values short-term ounces above longer-dated ounces and discounts the value of long mine lives, which are undeniably better. Thirdly, location is key. In a world of rising risk, investors and analysts need to recognize that not all ounces are equal and a premium must be applied for Tier 1 jurisdictions. Fourthly, shareholder returns are paramount. As an industry, we cannot put shareholder returns last and capital investment first. We need to pay dividends, and I'm particularly pleased that Evolution has paid 22 consecutive dividends. But this is critically important and, in my view, an area our industry has been guilty of overlooking. And finally, people are our superpower. If we are in a war for talent, we need to take up arms. Our industry is enormously important to the prosperity of our country. It's the biggest driver for economic growth and wealth creation. No state in Australia knows this better than Western Australia. And for Australia to continue to be a global leader in mining technology, productivity and innovation, we must attract the best and brightest to our sector. We must do better in the space of inclusion and diversity, and we must get better in making mining an industry of choice that school leavers aspire to joining. Ladies and gentlemen, friends, colleagues, put simply, we must be more confident, optimistic, and proud of all the great things our industry is. Thanks.